Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to go through the week ahead analysis. We're going to highlight the news for the week and some charts to watch. So let's kick it off with the news. We actually have bank holidays tomorrow out of Japan, Canada and the United States. So low volumes are expected in the Asia session as well as the New York session. So be wary of that going into Monday. We then have some important speech by the Bank of England Governor Bailey. Recently, obviously, the pound has been in a bit of free fall. So be interesting to see if the Bank of England Governor is going to talk about interest rates and how they could potentially try and support the pound as it continues to move lower. We then have some GDP data out of the UK, which is expected to come in lower with a drop from 0.2% to 0%. And then we have some really important US data. We have PPI, FOMC meeting minutes, CPI, and core retail sales. So Wednesday onwards for the dollar is going to be very interesting to see. Now, we can see here CPI is forecast to come in a little bit stronger. CPI year on year coming in a little bit lower. However, if we do see CPI growing month on month, that's going to show a sign that inflation isn't really slowing down all that much, and that we could likely see a continuation of the pressure on the Federal Reserve to hike rates a little more aggressively. Those pressures have been off recently until sort of the recent NFP reports, which has applied a bit of pressure again. But this kind of data, if it was to come in strong for the dollar, will also pile on the pressure on the Fed. Outside of this forecasted news, we have had other news between sort of the war between Russia and Ukraine. It has escalated a little bit in terms of the talk of nuclear weapons, as well as recently Ukraine have blown up the bridge to Crimea. That's going to be seen as a very offensive move, and Russia have already retaliated, blowing up apartment buildings. So the war there is escalating, lots more talk of nuclear weapons, and that could add some risk into the markets going into this week. So I do want to just stress that. Let's move on then. So we've got the strength meter. The strength meter showing us that the US dollar is the strongest currency at the moment, where it's in the +7 zone. So that is the strongest the currency strength meter goes. So we need to look for dollar continued strength or a little bit of a reversal to that strength coming in. Looking at the sort of forecasts coming in, it would suggest that the dollar will remain strong this week. Euro has dropped off. We can see it's come from +5s down to 1, so it's dropped quite significantly. So euro short selling opportunities could be in effect here and could be flown into the market. Other interesting stuff, we can see that the yen has come over the zero line here. We came from these reversal lows, now back over the zero line, showing that strength in the market. Moving on to some charts of interest then. So we've got Euro US dollar. We can see that price came into that parity level, dropped to the downside. We formed these lower highs in the market, and prices continuing to press lower. So I'd expect the same from this week, especially if we can stay below the 0.9850 handle. If we stay below there and price retests it and sellers re-enter the market, then sellers could be looking to drive price back towards the 0.9600 level. A break above the 0.99 handle or 0.9950 would be more on the aggressive side, and if we traded above parity, then buyers will more likely step into the market there. Going on to Aussie US dollar then, we can see that we've most recently traded within a consolidation zone. We are currently trading back at previous lows at the 0.6364 level, breaking below 0.64. Now the RBA last week hiked interest rates, but they slowed the pace in which they're tightening, so that could be seen as a negative in the fact that global inflation continues to sort of be on the rise. So that could be a fairly negative thing from the RBA, even though they have hiked rates quite substantially. And if the dollar continues to put pressure on the markets, as well as, like we've talked about, with the risk in the markets at the moment. If volatility rises, then we could see Aussie US dollar trade into the downside, and sellers may want to push price towards the previous levels at 0.6250. Another chart of interest then, so from the strength meter, euro moving to the downside, yen getting stronger. Wanted to look at euro yen to see if there was any opportunities around key levels, and we can see that price came in towards the 144 here, started to trade lower. We got the lower high, very similar to the euro US dollar price. Price then traded for the lows at 142.50. And if price is going to remain below this area here, I think we could see sellers trying to push price lower, with targets being the recent swing lows at 140.75. If we were to trade beyond that, then it could open the door to sellers pushing price back down to the swing lows at 137.50. Finally then, gold. So we featured gold last week as well. We were expecting some selling to come in here. It didn't quite happen. Price extended to the upside because of the dollar weakness. We've then traded up to the previous highs here and key resistance zone at the 1730 handle, and we've started to reject. Now this is going to be determined by either the risk in the market or the dollar strength, and I think if the market's determined that it's going to be more of a risk market, then we could still see buying above the 1730, which could drive prices up towards the $1,800 level. However, if the dollar's going to remain strong, it could continue to push gold prices lower this week, with 1675 being previous highs, 1622.26 being the lows. Hope you enjoyed this video update. If you did, leave this video a thumbs up, subscribe to the YouTube channel to see some more Forex trading content, and I'll speak to you in the next video.